Got a really great question come in via email. Mike, how do you deal with disappointment? It's the same way that I deal with euphoria. I always know where my position size is, and I know where my protective stop is. Um, I take every trade, every signal as it comes, and I don't let my feelings knock me off base. I don't try to overthink things. Why? Well, even with several decades of experience, it's still very difficult to know exactly what's going on in the market at any given time. You really can't tell all that much by looking at charts. So all I do is I say, well, it's a bit of a drag. I have 3 losing trades in a row, but with my style of progressive exposure, it's not all that much money. I just had a bunch of failed starts. Oh well. What's the best thing I could do? Is put on the fourth trade. Don't overthink stuff. How you feel is really irrelevant to your model when you think about it. But this is why most people can't make it in trading, is because they're too emotional about money. And whether I'm in a winning streak or a losing streak, I just do the same damn thing every day. Why? Behavior predicts where you end up. So I can't get psyched out of putting on trades. I can't get psyched out of being in trades and wanting to offset them too soon. I just have to keep following my rules. And so when I say don't look at your P&L, what I'm saying is focus on your process. Stay out of the results. That's what you need to do. Focus on your process day after day after day to the point where you're bored stiff with it, right? So that's how I handle disappointment. That's how I handle moments of euphoria. And I really don't have those feelings, but if I'm in that neighborhood, if you will, you put on a trade, you get knocked out. You put on another one, you get knocked out. It's like, okay, the markets has a lot of false starts right now. I take solace in the fact that I'm not putting my optimal position on all at once. So that this way, I'm having smaller, pullbacks. Because again, drawdown isn't within the month. Drawdown is what happens month over month, right? So you can define it, I guess, the way you want. But a lot of people misuse that, term. Like they might be up 10, 15% for the year, and they're down 2% in May, and they're like, I'm in a drawdown. And I'm like, no, you're not. May's not over. I'm almost over, but, it's really what happens month over month. You're going to have losing trades. You're not going to make money every day. So if you follow your process day after day, that process is what's going to save you, not the result of any one particular trade, right? You should feel indifferent about that in many ways. One particular trade's not going to matter. Now, where do I get aggravated? It's with my style, again, of more progressive exposure, and I can get into having, like, maybe 4, 5, 6 risk units on, and then the market stalls right as I get to the optimum spot, and I have to honor my protective stop because I scale in, but I don't scale out. When the party's over, I puke out the whole thing. And if I get knocked out, then I got to start the whole thing all over again. That's a little bit aggravating, but I know this might be the case for you. If you kind of look and rank your gains, right, for the year, or rank all your trades from the highest all the way to the lowest, and then create a chart, you'll see like some type of normal distribution, and you might see a cluster around the mean. I would much rather kind of see everything kind of skewed to the right, with, again, 3R, 4R, 5R, 6R, 10R. And that happens with progressive exposure as you add to your winners. Let the market do the work for you. Of course, you're going to get knocked out of trades, but this goes back to the video where, I talked about where do your winners come from? Are you collecting, nickels and dimes, or are you building into positions and letting and growing, massively to offset all your small losses and then some? That's more my style. You can do it the way you want. But that still doesn't aggravate me if I get knocked out to where I want to quit or throw a hissy fit and be all pissed off, and get aggravated that way to the point where I sabotage myself, because I just know that this is all probabilistic at the end of the day, and there will be times where I in the area of frustration where I might be able to get one or two positions on, but then the market runs away from me before I can get more on. Um, it happens. It's not a frequent thing because normally, again, I'll have my alerts or I'll have my stops in. I do not prefer to add 2, 3, 4 times in one particular day, right? Because then you're setting yourself up for mean reversion, at least my style. And that means propensity for getting knocked out. So I have a diet that I go on in terms of adding to my winners. That's not going to be spoken about here, but it's something that you can figure out on your own through your own iteration, what's good for you and yourself. And then if I do make the money, it's like, okay, well, I know that this is going to happen, X amount of times. Every time I'm able to put on all these trades and have this progressive exposure, I know one in X amount of times the market will continue to grow and go, and I'll be set. And this will be in the neighborhood of one of the bigger winners for the account. Because again, the goal is to grow the account, not to worry about putting on a trade, making 3R, taking the thing off, and doing all that. That to me is more like blue collar working in the trading business, and I don't want to do that. So a lot of this is going to come down to your iteration. What are you willing to do to try to, put on, what kind of trades you want to put on in the market in order to learn your craft? Because to me, it's like painting. Sometimes you can overthink things and just not do anything, or you can just mix a bunch of color and go put it down on substrate and see what comes out of it. It's through that massive amount of repetition. That's where you're going to learn the most about yourself, is through that repetition. By keeping your losses small, you give yourself an enormous amount of staying power, which is something that I advocate because I want to see you have the type of success that I've had, over time. So that's where my head's at, is trade small, learn to gain exposure, learn how to read the crowd. That'll help you better understand those key inflection points of where, A, you need to put your protective stops, because that's always the first order of business. But then, two, when you're looking at the crowd behavior, you can learn where to add to your winners so that when the market does eventually take off, you'll be in the right place by definition at the right time. That's really what this business is how do you put yourself in the right place at the right time with enough on so that it matters? Rather than saying, okay, I have to put on one trade and then sit and watch my P&L. Don't be a retail piker. Learn how to grow your account and make a goal that has a huge difference in your life, right? That's what I thought about this business, and that's where you might not like what I'm saying, but my story's been consistent from day one. I needed to make life-changing money because I had already been working for over 10 years by the time I got to Wall Street, and I was physically and emotionally drained from working like a dog. So I needed to learn how to work smartly, which was very foreign to me. I didn't know anything. So I'm trying to convey to you, what was my thought process, kind of like a living, breathing inner voice of trading, right? Of what I was going through as I was going through my iteration, which really in your first couple of years is all you should be doing. You're not necessarily looking to make big money your first couple of years. You're really learning to try to learn your craft. How do you culture the pearls? So that you build your confidence, you build your skill set. So then in years, 4 through 30, you really can play at the pro level. Even if you don't want to run other people's money, you still have to execute what the pros do. You see? And I just couldn't afford to work for minimum wage because I didn't have the time. And the commission structure was too high for me to try to do it on the short term. So I really had to think about building into my positions and holding those positions for as long as possible so that I could let the market do the damn work. I always had protective stops in, but I knew the market forces were 1,000 times stronger than I could ever anticipate. Anyway, have a great weekend and watch these videos here.